Hi everyone, welcome to this another video in Market Talk YouTube channel. In this video, we will cover about Reliance Industries, what is the view and what is the strategy, trading strategy that we can take for positional basis for the August series. So it's going to be very interesting, and if you are bullish or bearish, definitely both are going to make money. Let us see what is the probabilities, what is the view. So I plotted the Reliance Industries chart in daily time frame, and this is chart. The first thing is there is a gap at 1300 levels which need to be filled in, which could be filled in maybe in August or September, whenever, because bears are very ferocious, and everybody want to book the profits who are holding from here. So definitely it will be not taking much time to book. Any bad news comes, it can fill in. Okay, so but we don't know when it will get filled, but we will not expect that much. So the current trend is upwards without any doubt. Now first understand this in the weekly charts. What is the Fibonacci ratio it tells? Okay, if you just plot this Fibonacci ratio for this Reliance Industries, now Fibonacci ratio tells you that the target for this up move is almost reached. 2094 was the target and has been reached. Now after this 2094, what is the next target? Next option for the bulls is 2850. So can it happen 2850? I don't think so. Why? Because the reason is that the RSI is at very high level. The first reason is RSI. Let us plot the RSI in daily time frame. So RSI, what it tells is it is heated up, completely heated up. It is 80 levels. Most of the times 80 is the high level for Reliance, and it has to reverse from 80 levels. It cannot go beyond that. If it goes also, it cannot sustain. So there is high chance that this breakout of this level 2094 will not sustain and has to return. But it will make a candlestick formation, shooting star formation, to take out all the weak bears. All the weak bears will be taking out and make a shooting star pattern, then only it will reverse. So you have enough time. Now take the ADX. I told you about the ADX indicator also. If you see, it's a clear buy signal from starting from here and it is riding. Most of the times the trend will get cooled off when the ADX, this black line is the ADX. ADX reaches 50 to 60 levels. That's the time the trend will get cooled off. Now if you see, the trend of ADX is around 42 levels in daily charts. So maybe it will go to 50, another to 50 levels and then cool off maximum. When it returns, what will be the target on the downside? Let me just remove this. Now I will remove this also. Like now we saw that on the uptrend we can have target of 2850 levels. Now when we start seeing a downtrend, where is the target it could be? Now let's make a Fibonacci ratio starting from here, that assuming that return will happen from here. Starting from here is the bottom. Now target could be at least 1900 levels, which is a minimum retracement level will happen from this level. If assume that market goes to 2200 levels and then makes a return, then 1900 is a target. Whatever way, if you see, 1900 will be a target. 300 points rate downside movement can be seen. Assume you are selling a futures now. Futures at 2200 rupees level, there is unlimited risk on the upside. Market goes up. If it comes down, no problem. You will make 300 points move and 1.5 lakhs you will make profit in one lot. Now, in case you want to make a hedged position and very safe risk return, which strategy you can apply? So let us first go for delta neutral strategy. Okay, first strategy we'll discuss about delta neutral strategy. What we'll do in this is we'll first for this identify the option pain. We'll go to the Reliance and see what is option pain and identify the position. Now let us go to Reliance. Now July is almost coming to end. Now let us go for August. 2000 is option pain. So 2000 option writers, call writers and put writers are believing that the market, the Reliance will be around 2000 levels, may not go up. That's what they are believing. In case it goes up also, slightly it will move, because already we are far away from 2000 levels. Now we are on 2150 levels. Monday possibly will gap up and gap down, or will do gap down itself directly. Now 2000 is the level what option pain is indicating, so there is no risk for going upside as of now. The downside only chances are very high. Now what we'll do is we'll take a position, first delta neutral strategy. So delta neutral strategy is what? You buy futures. Futures, the delta is 1 always, and then option is the Greek will depends on the strike price what you select. Now let us select, you don't know what is the Greek of delta 0.5. We have to identify a option which is 0.5 double the quantity you do against the futures position what you taken. Now let us take the strategies builder. Now we'll take one Reliance. Now we are thinking that market Reliance will go down. So we are selling the futures, one lot. Now let us see the margin also side by side. So what will be the margin for this in case we go for this option? Assume the one lot of futures if you sell 2.93 lakhs is the margin required. Now this way if you sell one lot of futures and market goes to the 500, 2,800, 3,000 also, then it's a big risk. You may lose big money. Okay, that is not going to happen. Now that is the reason we are employing the delta neutral strategy. Now Reliance is at 2,148. Now let us go for 2,200 call option and buy 2 lots. Let us see how much is this. Options, August expiry, both will take August only, will not take July and all. 2,200 is the call option we will selecting and we will buy 2 lots of option call. Now see the payoff chart. Now let us first see the Greeks. Now here the delta is in the value. Now click decimals. The delta is 0.04. So delta is almost neutral. Now futures -1, delta is 0.5. That is reason 95 is coming when you make two quantities. 0.95 is the delta. Now delta is neutral. Now what will happen if the market, because you normally people are afraid that when you buy option the market the price is going to come down, it will be decay also, because we have 1 month time. Now we'll tackle that also. Now 30th, assume that today we are taking position, assume Friday you have taken a position, on Monday if you see this take a position you taken, the profit that you see is 2,000 rupees only loss. Assume the Reliance doesn't move at all on Monday, one day you are making a loss of 2,000 rupees, that's it. And the loss will increase only after 1 week, 2 weeks only it will go. You are not going to sit idle as it is and see how we are going to make up for the loss in the option which you bought. So this is called delta neutral strategy, where you are going to see unlimited loss on the upside, unlimited profit downside also. Now assuming we saw 1,900 is a target for Reliance. Now what will happen if the Reliance goes 1,900 rupees on the expiry day? Now go to the expiry day. Now you don't do any adjustment at all. Just see what happens on the expiry day when the Reliance goes to 1,800. Assume it goes to 1,800 levels, 1,900 levels, 1,900 levels. You are going to make a 12,000 rupees profit without any adjustment, because you are holding the call option as it is. But you are not going to do as this one as it is. Once the market is down move, you are going to hold only one lot of call option. Now let us see what is the margin that is required for buying one lot of call option in Reliance to see the benefit of margin adjustment hedging position. Now let us buy 2,200 call option, 2 lots, 1010 buy. So when you buy 2 lots of call option with 1 lot of futures selling, now your margin is only 38,000 rupees. Okay, so the risk is only 38,000 rupees margin, unlimited profit you are getting on the upside. If you are bullish, assume that you are completely bullish, you expect that Reliance go to 3,000 levels, 5,000 levels in August expiry, then you can go for this strategy. Now you think that now the market has come, as I showed you that ADX also is getting cooled off, we are getting our fall to levels. Once we see a close below the previous day low, then it's a bearish bet, you can see, because continuously we've been raising, and once we go below the previous week low, previous day low, then you see that going to be this one big candle, we are going to see a complete reversal in the month of August, because definitely this rise of 76-degree rise cannot sustain. You saw that rising degree also, correct? Whenever I show you in the trend angle, what is the trend angle in the Reliance, you can see what is the trend you have achieved. 70-degree rise is seen. This cannot be achievable. Even if it goes to 2,000, maximum it go to 100, maximum it can go to another 100 rupees. I don't see more than that. Now less conservative. Now instead of buying 2 lots, you are buying only 1 lot. So what this option strategy you can buy, the strike price is 2,140. You can buy 2,150 or 2,160. This is July expiry. Now we'll go for August expiry. August expiry, let us go, and we'll buy 2,160 expiry, or 2,140 also we can buy. 2,140 expiry we'll buy. If you buy 2,140 expiry, 1 lot only. Okay, instead of delta neutral, we are going for this expiry option strategy, where it will be, we are having a bearish bet, but at the same time we are hedging a position also. Now the margin is 41,000 rupees. Earlier we buying 2 lots of options, this 2,200 how much you are shelling out money? 112 into 1010. There for option buying you are selling 1,30,000 is the amount you are giving. Now we are buying 2160, 130 rupees only we are buying to 130 into 505. Here we are spending only 65,000 rupees as the option premium. So here the amount that you are going to see premium decay will not be so much. Now we will ready. This is the first strategy, highly bullish. You think still market Reliance will go up, that you can take the delta neutral strategy and you build up the position and you will get double the money. Means you are going to see here 2,500 to 600, you are going to see 1.5 lakhs and profit you will see. And the market coming to 1,400, 500 levels also, you are going to see 1.5 lakhs profit with just 30,000 investment. Now we will see little less conservative and bearish bet. Okay, now what we will do here, we will buy only 2160, one lot of a call option. 2160 call option, only one lot will buy. There only investment is 65,000 rupees for the call option. 2160 call option you buy and expiry till expiry, what happens here, August on Thursday. Okay, now on downside, on upside, if you see here maximum losses, wherever the market go, you have lost 68,000 rupees the call what you bought, because you are less, because you are bearish, the Reliance will go down. Once the Reliance started going down below 2,000 rupees, this is the price from where you start making money. Now you will be making money, assume 1,900 also, if it goes here you will make 62,000 rupees, which is almost 40,000 is investment, and you are making double the money in this strategy, where you buy one lot of 2160 call and selling one lot of future. For every 100 rupees you are going to make 50,000 rupees in the profit directly. There is no decay, nothing. Futures directly you are going to get the benefit. So this is a second strategy where you are going to see safe bet. These are only two strategies which I am suggesting. And now in case you are seeing the decay in this and how the adjustment can be done, recover this loss in this. If you remove this, assume that you are seeing some small profit here and making some profit, booking a profit in this call option, then your that margin benefit what you are seeing and the hedging benefit what you are seeing will be taken out, and 2.4 lakhs is what you have to give margin. Entire money you have to pay margin, so that you cannot take this position as it is. You have to continue to hold the position, one lot of call option what you bought, because maximum risk is 65,000 rupees is loss. In case market Reliance goes to 3,000 also, your loss is limited only. You are not going to touch this. Now the market Reliance started going down and you make up this loss, you can start selling nifty options, nifty call options, and recover the loss. Every day if you see the Greeks also, what is the Greek average Greek you are going to lose? 2 rupees per day, correct? 65,000 rupees 30 days, you see what is the 65,000 rupees the profit means premium what you are going to lose every day, 35 days now till now. Roughly 2,000 rupees what you are going to lose every day of theta decay. The high will be happening at the last third week and fourth week. By the time you are going to, for recovering 2,000 rupees per day in nifty option, selling just one lot of call option. Okay, 25 points if you get 25 rupees, 25 points in nifty by selling call option, the market goes down, then you recover that call option theta decay through selling nifty call options. Because Reliance, if you sell call option, it will be very less time decay and you will not be able to make much money. So selling weekly nifty option, call option, when the Reliance is going down, you make up the money on the call what you bought. So this is strategy all about. Hope you understand. I made it clear, and definitely you get the margin benefit by holding hedging position. Never ever hold a naked position. If you see what is the benefit, you are having the peaceful night sleep also, that your overnight position Reliance going with 10% up, 20% upside also, no problem, because your position is hedged. If you are holding double the quantity, delta neutral strategy, then your benefit is going to be double. If the market goes 2,000 rupees, then you will make double the money, because the futures you will whatever the loss you see, you are going to double the money in the call option what you buy. So depending on the view, you have to take a position. Very aggressive on the bullish, you buy delta neutral, and nominal when the market giving a move of the down move, Reliance target 1,900, at least 1,900 should be target. Then that time you buy, sell futures and buy one lot of 2160 call option. So this is strategy. I hope I explained you the strategy very well. It's all about implementation, how you implement this and hold your guns. Okay, hope you like the strategy. Whatever strategy I'm telling you is my view, whatever I thought I want to explain you. Whatever the profit loss, whatever, if you don't manage properly, definitely you end up in a mess up. Don't mess up the strategy. Never change your original position. If you exit your original position thinking that the call option I will make money, then you will make a mistake and the future suddenly reverses, then you will make a loss. Never ever do that. Keep the original position as it is and try to recover the loss in the call option whatever you bought by selling nifty options. That's the strategy you do it. Controlling emotions, discipline, and target is should be very clear. Reliance, wherever it go, you should not bother about it because you have hedge strategy. The maximum risk is 65,000 rupees. Even if market goes 3,000, 4,000 also Reliance. Okay, when the market, if Reliance, assume the Reliance market goes up, then you have to start selling the puts and recover the loss of the futures. Okay, that's the way you have to manage this trade. Because the expectation of Reliance is on the downside, this strategy you can adopt it and make benefit of the move. Okay, hope you like the video. Please subscribe and like the channel if you are new. Thank you so much for the support. Bye.